Hey everybody, this is Mo Trader here, and today we're gonna talk about a topic that I get a lot of DMs, a lot of emails about it. Hey Mo, I shorted this and I got stuck and I couldn't do it. So let's examine one of the emails that I got today. One of the emails that I got today was about ZSAN or ZSAN. Now, if we zoom out, we see that the stock went from $4 or 450 here all the way to 11 yesterday. Now this guy, at least he says in the email, says the stock was up a lot yesterday and this morning he even spiked more. Now he's talking about the first spike right here. So I got in short somewhere at 9 with a higher day break stop. I'm like, okay, at this point I get it. The problem with it is, what are you looking for? Now this guy got short, the stock pulls back 75 cents, doesn't take anything. The stock bounces back up to 9, okay, and it spikes all the way to 10 and he's still holding. The stock goes and breaks 10, okay, the guy is still thinking this thing might go to the downside, and on the next candle takes it off when it just pulls back. He gets in, this thing spikes over 10, he gets out again, okay, now he took 2 losses and he said, okay, I'm not gonna touch the stock anymore, and from there the stock just dumps from 10 to 750. Now a lot of you guys probably looking at this saying, shoot, this happens to me all the time, right? And some of you will be like, well, but the stock was up a lot, why the stock didn't pull back? Let me tell you something. The stock doesn't have to pull back. You just have to watch the price action. First of all, watch that pre-market. The pre-market, the stock was holding VWAP, holding the moving averages, was trending up. This is giving you one clue that this stock may actually just jump. Second, the stock has a lot of volume and spreads are big. So that means the stock can't run, okay? And we've seen what it did the prior day. It went from 450 to 11. So, second, you didn't honor your stop loss, okay? Stop losses are really important in trading. Like, this is how you protect your capital. Like, when it breaks a round number after it loses it, this tells you something. Tells you the stock is strong, right? It just reclaimed the level that it lost. That tells you buyers may step in, right? Third, when you got that initial 75 cents, what are you waiting for? Like, the stock just pulled back, let's call it 70 cents, 50 cents. 50 cents, that's 50 bucks on 100 shares. That's 500 bucks on 1,000 shares, okay? What are you looking for? In the morning, the first 3 minutes right here, I don't even trade the first 3 minutes. I just wait for the 5 minute because it's cleaner, right? Most people will go, actually most traders will go with the 5 minute. And this is what they're looking at. Okay, it's a breakout. They see a bear flag or a bull flag and the stock just broke out and probably they're jumping in, right? So you really have to see both sides. Don't be like a short biased. Okay, this thing is up a lot, I want to short this. Look what the other people can see, right? This is a breakout for these people, and these people bought this, and sure enough they got paid because this is what the pattern, this is what the most people are seeing. Now if we go back to 1 minute, so you were short here, you didn't honor your stop loss, this thing spiked on you and you didn't stop out because you wanted to stop out at 10, and then emotionally you got back in the stock again. Because at this point, if we scroll this in like that, okay, nope, this way, you get in emotionally. The stock's still trending up at this point. It just did it. It opened, shot up, came back up, higher lows, it's going up. Now it may put a higher low here, it breaks and it goes to 15. Nobody knows, okay? That's why trading stocks is about statistics. Don't get in just because, oh, okay, stock just lost that 10, right? Okay, I'm just gonna get in. But the stock is trending up now. It's different. We have more information that tells us a lot of things here. Now, okay, we go more. It breaks back to 10, he gets out, right? Now, let's assume this was right and his risk in the higher day, because the higher day is the only stop that you could risk off of. You can't risk off of the 10. It can go over under the 10 multiple times, right? And then we get that spike. Actually, he would never broke the higher day, so he would have been still in and he would have been capitalized on this move. But if you just didn't trade the first 5 minutes, okay, you've seen this tap on the 10 and you just relax, laying back, right, just watching the chart, watching the price action, and you saw this double top. Now when it comes back down and loses maybe the 9 EMA, you get short with a set risk to reward ratio, so you know exactly how many shares you're taking. Now you're actually capitalizing on all this move until it breaks the 9 again, and you've been out, let's say at 8 and you got in at 970, so that's $1.70 without risking any emotions, without doing anything. And this is exactly something I would do. I will just wait, don't trade that stock for the first 5 minutes and just let it do its thing, and then when it actually tops off and it gives me an edge to trade it, and I will take it. Okay. Another one was MNK. MNK, this guy wanted to short right here and then he got stopped out. Now, actually I should have just done this. Take 2 seconds here and tell me is this a good short or not. Maybe you will make a claim, okay, 1974 here, 70s break, maybe we can get to that 19, right? Now, at this point, what you're not seeing is the stock just came from 2170 to 1970s. That's a buck move, okay? That's a lot. You need the stock to bounce again back up for you to trade it. Okay, I can see that it held the VWAP, but as you can see right here from the action, it held a higher low. Now it just reversed and started trending higher. Higher high, higher low, higher high, higher low, higher high, higher low, right? It started trending up. So this is exactly what you guys need to go back to, is the basics. Most people's like, I want to make fast money. Just learn the basics, learn the trends, right? You don't go and short here at 21 expecting this to come all the way down. If you took that 21, you're just looking for that quick wash and you're out, because this could become a flag, and in this case it became a flag, right? There is always two versions to the story. There is two sides of the story. There is a side where you're saying, okay, I want to short the stock, and there is a side where it says, okay, I want to long the stock. Now, how could this be a short setup? I want to see it bounce back up and then it break off these lows, and now it tells me, okay, this is a low, and this might come down to VWAP here, which is usually my target on these plays, and it might continue to the downside. Or on the other side, it becomes a flag right here, low, and then it starts holding high and low, starts breaking that flag, and it just pops, right? Now let's go and see what the 5-minute people see. So we were talking about here, and you can see clearly it's opening range breakout. It's a first 5-minute breakout, and people trade this. People take the first 5-minute up or down depending on what's going on with it. And pre-market, this thing was trending up. It's gapping up, it's trending up, holding the moving averages. This thing tells me, okay, this thing might pop, and this thing popped, right? But obviously the first minutes it just didn't give an entry whatsoever. You can see here a buck move on MNK that's pretty big, and then 2 candles up, and then the flag, and then the breakout. So the takeaway from this, guys, is don't trade the first 5 minutes. Just let the stock do its thing. There is a lot of emotions. The stock will whip up, down, do a lot of things, and sometimes it just tells you, okay, I'm super low on volume today, just don't touch me. Or it starts going up and down, up and down, up and down. It tells you, okay, I'm choppy, don't touch me. Like, let the chart tell you what's going on with it, and don't jump in just because, oh, having a bias, oh, this thing is up a lot, I'm just gonna short it. Okay, if you're just gonna short, that means you're just giving it a 50-50 shot. And as we all know, 50-50, it's not really uh, the way to trade stocks, right? Well, we need at least 60, let's call it 60% to make money, right? And that's if you're losing 1-1, whatever. But you get what I'm trying to say here. So wait for that trend, guys. Actually, this long setup right here, I took it today and I traded it myself. But this wasn't in the first 5 minutes. This was the first 5 minutes. I didn't even touch this, right? So I was just waiting for the setup, waiting for my edge, waiting for something to tell me, okay, you may want to get in right now, you may want to short this right now, or you may stay away from this right now, because there is a lot of emotions. If we go back to, sorry about that, if we go back to ZSAN here, you can see this thing, it just ripped $1 in quarter, and then pulled back $1.25, and then ripped a lot. You know, like how can you trade this? How can you take size on something like this? Unless you're trying to pick tops, which is I don't do, right? So this is my 2 cents for today, guys. Thank you for watching. Hit that like button, hit like that subscribe button, share it with your friends, share it with somebody if you think it helps somebody. And if you have any questions, as usual, let me know. Leave a comment in the section below, and I'll talk to you later, guys.